Hey guys, so one of the things that we've been talking about here on our videos and certainly to our clients for really the better part of the past probably 6 to 9 months is this continued really rampant outperformance of mega cap tech. And while there's a reason for it, scarcity value, low yields elsewhere in the world, and we understand that, we've continuously brought up the risk that comes with it from passive investing to others. And there's a possibility that we're finally starting to see a pause and potentially a mean reversion in that trend where tech could start to underperform for a bit. So we're going to get to that in a second. Before we do that though, I want to actually go through a couple of more macro-oriented charts to give you some perspective. So first of all, just so you guys know, in terms of the summer months actually tend to be quite choppy. Here's a chart of the S&P 500 historically. You can see from the 1990 to 2019, so like 30 years of data. And you can see technically the summer period tends to be quite choppy. So I would expect something quite similar where we see, big up weeks, big down weeks, and maybe boring stuff. That's at least what we're expecting right now. And of course, we'll have to monitor that as it goes forward. Something else I wanted to bring up is the whole optimism trade, which, how quickly people have gotten bullish again. And this is something that's really quite fascinating. And we're seeing this, through our own research we're doing and even from the expanded sort of client base. And you can see that based on economic data, this is kind of, where we should be trading, but the S&P is up here. So there's a massive disconnect. I understand why, but it still is a bit scary when you think about that. Two more things, and these are very related. So here is the forward PE ratio of the S&P 500, and you can see we're basically above where we were earlier this year. So basically the market is more expensive now than it was in January, February, which is a little bit crazy if you think about it. And then this has been well publicized. This one was all over Twitter and the internet over the past week or so. It's a study or data that came up by Schwab. And you can see that historically speaking, the forward PE ratios, the one I just showed you, tends to track the S&P 500. But over the past 2 months, we've seen a massive diversion between forward PE estimates and the S&P, and I think ultimately that's going to mean revert, and they're going to lock back together. And I would think that equities are going to follow down to this at some point. So that's just to give you that sort of perspective. Hopefully that's helpful. If you have any questions, let us know in the comment box below. Now, the NASDAQ 100, this is the chart that we continuously show, continues to have that very strong relative strength. Now, versus the average stock in the US, the New York Stock Exchange Composite here is being compared. You can see we're trading well above the highs in 2000 on this ratio. Basically, what it's telling us that the average stock is dramatically underperforming the few very heavy cap stocks. Again, I've talked about this for months and months, so this is nothing new. But what I want to show you quickly is where Microsoft and Apple, and these are some of the two very big weights, where they're trading in the big picture. And we understand the scarcity value. These are good companies, but they're now potentially creating at least a cause for a pause here at a potential double top. And I don't want to necessarily go that far yet because you need confirmation first, but you can see the massive overshooting we've done, mean reverted, now we're back up here. And I would think there's a lot more sellers up there than people tend to think. And Apple is more or less in the same spot. You can look at something like Amazon, which is back at the upper end of its long-term trend. You look at something like Google, which had a big island reversal up here. So I think there's a lot of sellers up there. So what does it all mean? If you look at how, say, the NASDAQ 100 traded yesterday, and I'm going to make this a daily chart, it actually quite notably underperformed the broader market, particularly versus the Russell 2000 and even the S&P. So again, these big tech stocks, even the semiconductor complex like SMH, underperformed. But where it gets even more interesting is when we go back to that ratio chart and we do the QQQ versus the NYA, the New York Stock Exchange Composite. And what you'll start to see here is that we are starting to, we started to top out about 2 weeks ago, and now we had basically a follow-through selling day. And if you look at this through the lens of our simple 8 and 21 day moving averages, you can see that we are starting to potentially break below that 8-day moving average. And by the way, just since we're using simple moving averages here, another way of looking at this is noticing that the 50-day moving average is still quite a bit lower, and ultimately maybe we have to mean revert much lower. But again, the main point is that we may be at a point where that rotation out of mega cap stocks, tech, and into some of these more maybe the broader market and is happening. So I'm not expecting necessarily the S&P to take off and the NASDAQ 100 to go down. I think that's mathematically impossible because, again, there's a lot of mega cap tech stocks in the S&P. It still is a major part of it. But what we are actually thinking is that if these stocks do start to lose a bid for a period of time, we could see the broader equity market pull back. And that's really kind of the warning sign. So these stocks are very important to watch. And again, we don't have a bear case on these stocks longer term. But I just like we warned people about the NASDAQ 100 in January, February, and said that it was getting crazy, we're going to do the same warning right now. And I hope I've been able to give you some perspective on that, and I hope that's at least to some extent helpful. If you have any comments or questions, leave them down below. Give us a thumbs up, like if you enjoyed it. Spread the word, and we'll see you guys soon.